Prices are a poor indicator of housing affordability. Let's have a look. Hello everyone, Florian.Heise here, and welcome to another episode of HeiseSays. Grab your stein of coffee, because this one I just had to do a video on. Apparently property prices are a poor indicator of housing affordability. You know how we've been discussing the prices of property, and generally when we look at a property article, we'll just have a quick look to see where prices are at a national level, and then maybe compare it to wages, and just to see how they're sitting. We've been doing it all wrong, because the prices, or even the asking prices of property, they're a poor indicator of affordability, guys. So let's see what a good indicator is. Now, first, I want to draw your attention to just a few things for housing affordability, which I like to look at. Now, this is a Lorenz curve. Everything above this line, so let's say you earn 60%. You're in the 60th percent group of income earners. We go up, 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 up. Everything above this line, so all here, in this orange dashed line, which is Greater Brisbane, you've got access to about 70% of property at 30% or less of your disposable income for your household. Now, if you're sitting here at 40%, you still have access to 60% in Brisbane. And in this purple one, which is Greater Perth, you've got access to about 50%. That's properties on the market. Now, this is from the middle of 2020, so it's we'll have to get revised figures, but it just shows you how much of the market isn't affordable with that 30% rule. Now, that's the old rule. That's to do with mortgage stress. If you're paying more than 30%, you're considered in mortgage stress. Now, the question of if that is still relevant these days, that's another topic, because frankly, I think some people could quite easily handle the 30%. Really, the argument is it's got more to do with how, for someone up here on 80%, cutting 30% of their money for a house is going to be a lot easier than someone down at the bottom 20%. It's to do with where you sit. But it's just showing you how little property is actually accessible to people. Now, from 1990 to 2020, property has gone up to over 560%. Just quite reasonable growth there. This is why we have a culture obsessed with property, guys. This is why every TV show is about it. People sell courses on it. People think it's the only way to get ahead. Think about it. This is why barbecues. People talk about getting into property. And why I'm thinking it's Australian gold. This is what the masses will go into when they're worried about inflation. We can see housing prices, indices from all over the world. Everyone's, some places are actually doing a lot worse than us. Look at Canada. Look at New Zealand. So let's have a look, everyone. Let's look at this article to see why prices are a poor indicator of housing affordability. You know what? I'm going to have a shot of coffee. You let us know in the comments what you think is a good indicator of housing affordability, or how they're going to push it to say it's not. Housing prices are on another tear, increasing in the vast majority of Australia's markets, but does this mean property has become less affordable? The reality is changes in housing prices can be a poor guide to how affordability has changed over time. Well, yes, you compare it to changes in wages. Wages increased by about 222% in that period. They changed by over 300%. Houses have gone up over 500% in the same time frame. So what does that say? Accounting for the increase in the price of all goods, oh boy. So because inflation sucks everywhere, housing isn't as bad. As well as reduced interest rates, shows real repayments have only increased by about 22% since 2003, despite housing prices more than doubling. What did I just read here? Is this the whole repayments are more affordable argument? The struggle for people is to save up a deposit to get into a house. This is why we've got 2% deposits appearing everywhere. This is why we've got 5% deposits. Making the repayments is not the hardest thing. Often it's cheaper to pay off a mortgage than it is to rent in the same area. Okay. The analysis shows the level of housing repayment costs are actually at the same level as in 2007. The fact that housing repayment costs are significantly below the levels of 2010 suggests the growth in housing prices is not yet at an end. So, well, that's concerning. It's not that it's it's not that it isn't affordable, is it? It's that people can just even go further to the brink. Or what it really is showing you is there's such a big divide here in Australia between those that have and those that don't. The selling prices of homes have more than doubled. Housing prices have increased dramatically across Australia over the past 2 decades. Housing price indices produced by the ABS, which track average price changes, show prices in each capital have more than doubled since September 2003. In aggregate, prices in the 8 capital cities are up 116%. Oh boy, let's have a look here. I mean, there you go. 2022. So we had that dip. And here, there we go. Look at the black is, where's the black? That's weighted average. You've got Perth dipping down. Where's Melbourne? Melbourne dipped down. And there you go. Look at that. This increase in price seems incredible. Homes are twice as expensive as 20 years ago. But does this mean property is twice as unaffordable? Property prices don't tell the whole story. Other prices in the economy have also increased. What matters is how the cost of housing has increased relative to other goods. If housing has doubled in price, but so have all other costs, then there's no real change in the price of housing. The cost of a house in terms of other things a buyer has had to forego to afford it has stayed the same. This is why inflation needs to be considered when comparing the prices of things over time. Well, I did that. I compared the price of house. I used a house in the 80s to now for a loaf of bread. For a loaf of bread. What do you think's gotten cheaper? How many loaves of bread would you need in the 80s to now? Well, house prices have increased relative to other goods. Oh, there you go. Inflation-adjusted house price growth since September 2003. So what are we looking at here? There you go. Wow. Hobart is just going gangbusters. Tracking house prices relative to the price of other goods makes a big difference. Housing has only increased by about 50% more than other things over the past 2 decades. However, in Melbourne and Hobart, real housing prices have increased by 80 to 90%. The cost of borrowing has fallen markedly. Due to its substantial cost, almost all purchasers borrow money to buy housing, and the cost of borrowing has fallen significantly as the interest rates have dropped. Repayments on a new variable rate mortgage of $100,000 have fallen by more than $800 per month in $95 to $400 today, or even less with current fixed rate deals where you can't even get a $100,000 mortgage. I mean, do they even exist, or that's the repayments left when your mortgage is down to that? So borrowing has never been cheaper. Well, yes. But see, the problem is because borrowing is cheaper, people borrow more, and that inflates the cost of housing, making it less affordable. Given it is the cost of repayments that matter to most buyers, this fall in the cost of repayments matters a lot for how much housing actually costs. Housing repayment costs are similar to 2007. Scaling inflation-adjusted housing prices by how much the cost of repayments has changed for the 80% of people generally borrow shows that the level of repayments is similar to 5 years ago. Indeed, capital city repayment costs using this measure were at the same level almost 15 years ago. For example, in Sydney, inflation-adjusted prices are 44% higher than in 2003. But since actual repayments on a given amount are now 25% lower, the inflation-adjusted repayment cost is only about 15% higher than it was 20 years ago. But is he going to talk about wages? This will be good to see. Real repayment costs a little changed. Melbourne and Hobart have seen the largest increases in real repayment costs since 2003, but these costs have increased by only about 50%, which, while considerable, is nowhere near the 170 to 180% increase implied by selling prices over that period. Of course, expectations for interest rates matter. If interest rates change sharply, these calculations don't cover the full cost of repayments over the term of a mortgage. So why have housing ownership rates been plummeting? If repayment costs a little changed, why are so many fewer households being able to buy a home? It isn't because people have lost interest in buying. In the 35 years between 81 and the last census in 2016, the share of 30 to 34-year-olds who own their home fell from 68 to 50%. It is accessibility, not affordability, that has worsened. As interest rates have fallen and prices have increased, the burden of saving a 20% deposit, as well as paying stamp duty, government tax, that is an increasing proportion of selling prices, has become increasingly heavy. The distinction between affordability and accessibility is important because the policy response to them are different. Policies that reduce the deposit burden, like the First Home Loan Deposit Scheme, are likely to be more successful than measures to marginally reduce prices, such as grants. Or how about we look at removing stamp duty entirely and then reducing the government apparatus that's dependent on that? That'd be an innovative idea. Is there any politicians in the mainstream that are talking about reducing government? Everyone just wants it bigger, doesn't it? Don't they? But the next time a home sells for what seems like an outrageous sum of money, think about how much the repayments would be and how much the cost of everything has increased over the time, and perhaps it won't seem quite as outrageous. Where's the discussion about wages? Where's the discussion about wages? Where's the discussion about reducing economic complexity? What about what we were talking about yesterday, where the professors were highlighting the fact that professionals and people are moving further out of the city, so the workforce isn't as accessible as it was? Don't worry, guys. It's just inflation. It's still only up 50%. It'll be fine. It'll be fine. But, I mean, they make a good point. It is saving a deposit, which is a nightmare for a lot of people. So what is a solution to this, everyone? What is a solution? Well, we need to increase supply. You need to increase supply. We need to advocate for local government and state governments to increase the supply of housing. They need to make it easier to build, easier to get stuff across the line. You got to watch out for parties that want to limit development and construction. You know, they're against gentrification, everyone. But as our population is increasing, you're going to have densification in different parts of area. You're going to have greenfield land developed. That's what happens, everyone. Don't worry. Nature will be fine. Developments can happen. We need that here in Australia if you want housing cheaper. Watch out for the not in my backyard crowd. They're the ones that will vote for the parties to keep up the value and rental returns of their investment properties. And maybe it'd be nice to just reduce the burden on the average person. What do you reckon? Anyway, guys, let me know your thoughts and opinions on this one in the comments down below. If you're a fan and enjoy the content I create here, there are a few ways you can support us. You can join us on YouTube or Patreon. You can support us by using SelfWealth or Stake. Sign up to our affiliate links at Amazon, eBay, Independent Reserve or AussieBroadband. Buy our merch from HeiseSays. Use Gold Pass from the Perth Mint or support us via PayPal. Take care, everyone. Have a great day, and I'll see you next time. Bye for now.